All right, so hi and welcome to this trial session of the new India market review. Um, I just want to keep this little short today and run through what you can expect to see in the sort of new updated version of the IMR and just run through some of the important points, templates, layouts, etc. And any feedback, inputs, anything that you have are definitely most welcome. All right, so that's the purpose of this session, just to sort of introduce you to how it's likely to be going forward, and if there are any questions, then I'd like to answer that. Okay, so let's jump into it. So first of all, I have sent you all in the mentorship group the uh, template for this. So in AMI Broker, as you all know, there are these multiple sheets that we can put in the for each of the charts. So that gives us a lot of flexibility in terms of what we can and what we can't do, and seeing things in a much more, I would say, um, um, what um, I think detailed and easy to compare manner. That's the important thing. So I have taken some ideas from our previous sessions plus some new things, and I've added up it all into different sheets, and the idea being that we can then just to use these facilities much better. So let me just run through this. So this is part of the this you've already received this. So if you just use this template to open any chart in AMI Broker, it should be exactly like this. In case there are any changes, something is not working at your end the way it's explained here, then please do let me know. Having said that, these things will be improved, added upon, etc. as we go forward. Okay, so I'm just going to keep the NSE index here, Nifty index in a, I've got it in a weekly setting, just to start off. You can very clearly see that we're in a pretty bearish phase of the market. Today is Friday. Market has closed with a very bearish view, including a very strong rather volume candle right at the bottom, and this is a weekly chart. So 7,600 is now a very important support for the market, and by the looks of it, just the raw chart, and if you look at the volume and the trend, etc., then looks like we are certainly headed further down in the coming week. So 7,600 would be the critical level to basically watch for, and we'll just have to see how that pans out in the week ahead. All right. Yeah. So the first sheet that you have here is a simple candlestick come volume chart. No indicators except moving averages are there, and I'm not going to go into all the details, but what we have here are some long-term moving averages. The red is the 200-day moving average, okay, and then we have the 100-day moving average in cyan color, and in white is the 50-day moving average right there. You've also got the 21-day Bollinger 21 periodicity Bollinger Band. I'm just switching to daily charts, right? So the red, like I said, is 200-day moving average, cyan is 100, and the white dotted line is the 50-day moving average. All the other ones that you see inside, which are not dotted line but straight thin lines, are moving averages in Fibonacci numbers from of 3, 5, 8, 13, and 21, right? So 21 is the green one there, and the yellow one here, if you can see, which sticks right to the candles. The yellow one is a little difficult to, is the 3, right? So 3, 5, 8, 13 and 21. You can also see the details of these things on the top header right on top, and whatever is the, it's color coded and color matched with each of the lines, so you can read it off from here. Now one thing to note is when you can see the cursor in the middle of the screen, I'm assuming I click and you get a vertical line, right? When you get this vertical line, all the data which is there on the top header here is for that particular day, wherever that vertical line is. So you can see that this is for 12th October 2015, right? That is what all this data is showing. But if I move this vertical line somewhere else, please notice on the top left this date will change. So right now we are now looking at 8th December 2015. Now this vertical line also, if you use your cursor right left keys on your keyboard, then you can move it right and left, and you can see that the values keep changing, right? So just some pointers as far as how this AMI broker thing is set up. On the right you will see these rectangular bars on the y-axis, and I've chosen to highlight only the 200-day, 100-day, 50-day price and the live price here in the yellow with a left small pointer here. You can show all the other moving average values also, but I found that it was cluttering the layout too much, so I have removed those displays, and I'm only concentrating on the long-term moving averages at this point. All these other trend lines and all are studies that I have put on my chart. They are not part of the template, right? So on sheet 1, the template only consists of those various moving averages, the Bollinger Bands, candlestick patterns, candlestick chart, and the volume at the bottom, right? So that's it. Next is sheet 2, right? And on sheet 2, what I've done is just added RSI at the bottom. Okay, I've added, let me get the, yeah, I've added RSI, and it's just a default 15 period RSI, and the slow stochastic, which is 1533, right? So these are the two indicators which are on sheet 2, and the purpose of doing this is to only these are so leading indicators, as we all know, and this the idea here is to just look at leading signals, leading indicators, and not be bothered about anything else. I've also marked the 80-70 levels in the RSI. I have left that in the stochastic at this point, but I will probably add that I mean after today's session. So I've put the oversold, overbought, oversold zones in RSI. I have not yet put that in the stochastic. You can do that. I'm sure you know how to use AMI broker by now, so feel free to add those horizontal levels if you like. So this is sheet 2 with leading indicators. Sheet 3, okay, is only with MACD. I've tried to keep things as simple as possible. You can of course play around with this and suitably change it to whatever you like. Feel free to do that, please. And just to make a point here, let me change this to some stock which maybe there is no chart on. Yeah, right. So the reason I just changed this to talk, and I just put Suzlon, this name came to my head, is because you can see that all the lines, horizontal support, resistance, and all that disappeared, and only a few, one or two are there. Basically because I just wanted to remove the clutter on the screen. There was a lot of horizontal support and resistance lines on the Nifty chart, which, like I'm just repeating, those are part of individual chart studies. Those are not part of the template, and the purpose of this is to explain the template. So coming back, this is sheet 3. Sheet 3 only has MACD, so you can look at a lagging indicator. So of course the moving averages are already on the price chart, they're lagging, and then you have MACD, which is also a lagging indicator, right? So the idea of having sheet 2 leading and sheet 3 lagging indicators separately is based on the following thought, which is if I'm looking for early signals to enter, exit, divergences and all, then I just want to look at leading indicators and not be bothered. If I'm a trend follower, I'm having a positional trade, I want to be conservative in my approach, I want a higher um, reliability of my trades, and I'm not going to be that aggressive, then you want a lagging indicator, and that's why I just put these separately. Now, for those of us who would like to look at the whole thing together, I've put it on sheet 4, where both leading and lagging indicators are there. So your MACD, RSI, and stochastic is on sheet 4, right? So there's plenty of flexibility that has been built in. And this is, of course, just my template, my, I wouldn't say, yeah, I would say favorites, and I've just built it this way. You can, it's eminently customizable, so you can really do your own thing. This sheet 5 is so we have usually never done volume studies. We've never done volume studies and all of that. So the point of this session is to add volume studies, and this is just price, volume, and PVT and OBV. So PVT is price volume trend, as you already know, and OBV is on balance volume, right? So these are the two volume studies that we will also be looking at going forward. You may want to revise your technical indicators on OBV and PVT. So I hope you remember that. Okay. Then all right, so I had a small audio glitch, I think. So I'll just repeat this quickly. So sheet 5 is volume studies, and we've got price volume trend and OBV, on balance volume for volume studies. We'll be adding these to our studies going forward. So that will definitely be a plus. Then sheet 6 is something that is uh, has some new stuff. I'll explain this in detail a little later. But what we have here, and what we would have loved to do earlier, but because of issues earlier we could not, is I've got 4 more indicators here. So on the first one, this is relative performance indicator. And basically, to keep it very short for now, relative performance is how from the beginning of this chart that you're seeing here, the stock versus a benchmark, and the benchmark is NSE 50, Nifty rather, have the two stocks have comparatively behaved. All right. So I will talk about this in detail later. Then we've got beta, and it's a 21 period beta. Beta is how the stock is behaving compared to another any other security, and here I've programmed it to compare it with the Nifty again. 21 period beta is probably a little on the extended side, but I've said this because I am looking at positional stuff. For those of you looking at short-term 2-day, 3-day, 1-week type trading, then 21 period beta will definitely not be a good idea. You should change that parameter to less if that is what you are looking at. So beta is how the stock moves versus let's say an index, and there's 21 periodicity here. The third indicator is ATR, average true range. Okay, so the ATR, as you already know, is the average true range, and this is basically for those of us who want to use ATR as a way of or the using ATR to sort of stop losses or to measure even in a sense volatility and how much the stock has suddenly moved or not moved, or whether it is moving, not moving, etc. So that's a study in itself. Like as you can see, ATR I've just set at 5. That's a 5 period ATR uh, in this, right? And then the last one, unfortunately, this blue color really is bad on this template here, and this is ADX. Okay, ADX is directional index, and I've got the plus DI, minus DI, and the ADX all on the bottom pane. So this is for those of us who want to look at, let's say, trending stuff, sideways stuff. Is it a trending market, sideways market? Clearly, I mean, I think in this chart it's very beautiful because the right 1/3 is all sideways, and the ATR is behaving just the way it's designed in a sideways market. And then you've got, if you can follow the highlighter focus, this is when it trended up, and you've got a very strong ADX signal. Earlier I said ATR, my apologies. And then when the market was falling down, you got a very strong downtrend signal on the ADX here, and a very strong uptrend signal on the ADX here, right? And then the crossovers and all. So this sheet 6 basically puts in things that are not directly or immediately used for making a trading decision perhaps, and change gradually, normally change gradually over an extended period of time, whatever periodicity you might be looking at. And these are just, how shall I say, maybe a big picture idea to give us a sense of how the market is behaving on these various parameters of those indicators. Okay. Sheet 7 is to be ignored right now. So this is an Ichimoku chart at the bottom. Up is the price chart. And at some point in the future, when we do study Ichimoku, you can definitely use this. But as I was building it, I said, okay, let me just finish it off. I was actually, just to give some background, going through some of the easy charting tools or features which are there, as you can see on the right pane here. I was just going through various things, and I was just populating things that which I felt are useful and we could use from the inbuilt list which was there. So that's basically how I was going about it, and as I was doing this, I was just adding it to the different sheets and refining it and all. So this is Ichimoku, and then on the last one, you have something called volume at price multi, sheet 8. And to be quite honest, I'm not exactly sure what this is. I need to spend some time looking at how the AMI broker works this out. So we will definitely be doing that, and then figure out how volume at price multi works. Volume at price, and so basically that's, at a particular price, how much volume happened over a period of time. So a different perspective of the whole market action, right? So this is the standard template that I propose to be using going forward. Like I said, there will be some tweaks, changes, and updates as we go along. And if you have any suggestions, ideas, or thoughts that you think we could use on a regular basis on the IMRs going forward, then please do let me know. I'd be happy to incorporate it into the template if it works for the majority, and it'll be of more value, right? So just wanted to know if there are any questions at this point, Madhu, Balki, uh, before we step on to another template. Anything? Okay, great. Thanks. So this is the chart template that I am going to be using. So I'm just going to, okay. me just bring the whole thing here. It's probably going to be a clutter on your end. Let me just okay, so this is work in progress. It's still going on. I know, hold on, I'll just explain this. This is a lot of clutter, I know, but I've created so how many are there? 12, yeah, 12 relative performance charts of all the major sectors that are there in what we study. So we have the BSE Auto, just inviting you to the tabs on top, Bank Nifty, CNX IT, CNX Pharma, BSE FMCG, Metal, Realty, Capital Goods, okay, then Oil and Gas, Media, Consumer Durables, Telecom, and yeah, that's it, right? So those are the ones, and these are sector comparative charts. These are not individual stocks. So let me put this and uh, we'll just, so I'm just going to put a single chart and I'm going to load a template. So, okay. So if you can see this, you'll see that this is a very, very different chart. Probably some of you are seeing a chart like this for the first time, and I hope it is crystal clear at your end as it is on my side, because it's really important to understand what this whole chart is about. And so essentially, this is a relative performance chart of all the sector indices that we have data for. Not everything, the new ones, the thematic ones are not there in this, but all the other traditional ones that we've been looking at for many, many years are all there. So what is this? So first of all, what we have to be clear about, this is not a price chart. Okay, this is a relative performance chart. And how the relative performance chart works is basically, so I've put a vertical line and I'm just going to take it left. And so, okay, so this is actually not showing up very well. But let me do one thing. Okay, so because so what I'm doing is I am taking this line to the left and I'm taking it to the left extreme. Okay, and if you look at the bottom, right at the bottom, and you look at the date x-axis there, you will see that we are probably looking at maybe 25th of November 2014 there, right? And what a relative performance chart does is, from wherever you are starting this chart, so this is like 2014. Now if I zoom in, please watch what happens. So I'm going to zoom in. Okay, so now this is like, let's say for all practical purposes, the 1st of May, right? So no matter how much you zoom in or you zoom out, what happens is that wherever the leftmost bar of the chart is the starting point for this relative performance chart. And what this basically does is it looks at how each of the securities that you want to view, track, you can add as many as you want, have performed from there till, say, the recent most uh, date or the data that you have, and from that to now, how much it has changed in terms of percentage day by day, day by day, day by day, right? So everything is benchmarked to this first bar that is visible on the screen. I hope you're getting the concept very clearly. So 1st of May, let us say, is where we are here. And from the 1st of May, for every date after that, how did each stock behave day by day in percentage terms? Okay. So let me go right to the end and explain what this means. Okay, so if I come to the end right extreme now, okay, what you will see right on top is a number on the right side which says 15.92. Okay, so essentially, and what is this? It's in a light gray color. I hope you can see that. And 15.92 basically is 92693, basically rounded off, is the BSE Consumer Durables Index, right on top, if you can see. So now let me take a better color just for visualization purposes. Let's look at this green one here, right? And the green one here is BSE FMCG, and it is minus 0.35, and you can see that this is the green color here, which basically means that from 1st of May of this year till now, of last year rather, 2015 to now, and we're on the 8th of January 2016, the FMCG index has basically remained flat virtually. It has, if you had bought something at that time, you'd probably be not making any money at all. Okay, now if I go right to the bottom, you will see that there is 27.3, and that color code, if you go up there 27.3, or if you look for that number, you will see that here we are talking about BSE metals. In other words, the metals have fallen by 27% in the last in the time from 1st of May last year to 8th of Jan 2016, this is today when we are doing this session, right? So metals would have lost you the most money, plus 15% would have been consumer durables, and looks like a vast majority of the sectors have actually done quite poorly. There's a center line which is a thin dotted yellow line, horizontal line, flat line at this, that's the zero line. So you know that you can see that the number of lines are below that zero level from that reference date. Okay, now please note, for example, just to make sure that we are all getting this correctly, I'm going to change this to weekly. Okay, this is a daily chart, I'm going to change it to weekly chart, and you can see that suddenly we have a lot more data and the chart looks really different. And this is from, say, about 1st or 2nd of October 2012, right? Sorry, 2013, and that is now the reference point. And of course, you can zoom in, zoom out, you can take the scroll bar and go play around with it. And if you do this, you will see that this is really changing a lot, and that is pretty dynamic, and that the lines are quite fascinating actually to me. And essentially this is giving you a live picture of how the market behavior changed over a period of time, which sectors did well, which sectors did badly, and on which ones you would have made money, which ones you would have lost money the most, right? Now, interesting here. So if you have a look at what we are seeing right on the screen right now, forget about the time periods and the x-axis for a moment. If I can just invite your attention to a purple line here, right? I'm not sure how it's appearing on your side on the recording. Can you please confirm? You can see one purple line in the back, black background right at the back. Can you see that? Yeah. Okay. Let me actually try one more thing. Tools, preferences, let's see how the white one might look. Yeah, okay, I'll just use this. It's a little hurting to the eye, and that center line is completely different. I mean, I really don't like this because the lines are too thin. Or what do you like, white or black? If you're going to be staring for a long time, of course black is good, but just for explanation purposes, right now, would you prefer white or black? Okay, so just let's go back to black. All right. Okay, so if you can just see that purple line, oops, moved it a bit. Okay, doesn't really matter, right? Okay, so if you can see this purple line in April, June of 2000 and 8, April, May, June, July. So remember, we're looking at a weekly chart. This purple line, which represents basically the CNX IT index, okay, was the, in quotes, the best performing. It was the highest, right? And then it came down, and then over October, November, December 2009, Jan, Feb, March 2009, sorry, 2008, and then 2009, that purple line went down. And then you can see that by July, October of mid of 2009, this purple line had actually come back up. And along with that, there's this other line, which is, let me tell you, VSC Auto, right? The purple line and the sort of gray line. And even earlier, that gray line was quite high. So these two lines, these two indices rather, have clearly separated out and are performing much better relative to the rest. So that's why it's called a relative performance, right? How is one performing versus the other? And you can see that this outperformance stayed with the market for a good 1 year. And had we put our money into that, we would have ended up making a lot more money. So the whole purpose. On the other hand, let's look at um, let's say the yellow line at the bottom, right? This yellow line right at the bottom, which is for BSC capital goods. So the BSC capital goods was the yellow line at the bottom here, and it stayed at the bottom. Relatively speaking, it was really doing badly. And then when it went up also, it didn't really do that well. And if you see during the time period of this one, the yellow line actually just the 0.96, that basically a flat. It didn't really make or lose any money over this 1-2 year period, but autos did, and IT did. And then you can see this bright green line, which also started to do very well. Especially you can see that it didn't really go down a lot. That's the FMCG thing, and the FMCG also did very well, right? So you can, the whole point of relative performance is to look for relative strength, okay, and not to be confused with the relative strength index, RSI, okay. And what we mean by that is we want to find the strongest and we want to find the weakest, and you want to basically discard the anything in between. So if you wanted to find the strongest, then clearly, this sort of a chart clearly helps. Now if I go back, okay, now basically going into 2008 period, right? And okay, all right, so we have gone back to the maximum amount of what do we say, data that this has right now, right from 2007 for all these indices. And well, you can see that the yellow one, capital goods, had gone up extremely well, but started to underperform by October and then started to crash. Now, on the other hand, if you come right to the bottom, you can see that CNX IT was already doing quite badly, right? And the CNX IT went down when the markets actually started to fall down. Everything, of course, fell down, and the CNX IT went down. So if you're looking for something that was weak already, then this would have given you the picture. Having said that, please note that it does not, this sort of a study does not tell you how much something would fall or how much something would rise. It just tells you relatively one is better or worse versus the rest of the pack. Because if you're talking about making a lot of money, you've got to be clear about what relative or using the study, what it can and what it can't do. If you actually look at it, the capital goods in the yellow, or in this gray right on top, metals, I think, let's see, yeah, 150 metals, right? These are the ones which fell from, let's say, a relative index of 130, 150, all the way negative to -20. So if you look at the absolute change, you're talking about from plus 150 to -20. That's 170 point change. Versus IT just went from 0, let us say, to -50, right? So please don't get confused, or not confused, but please don't jump to conclusions that just because they are relatively placed like this, they're going to give you much better performance, right? So it's not about um, how much something could rise, how much something could fall. It's just telling you at this point compared to the rest how it has behaved from the past till now. And you cannot obviously directly just extrapolate that into the future and say, okay, fine, that's exactly how it is going to be, right? So I hope you got the concept of relative performance, right? So now what I did basically is I took this one level deeper. So in this chart that you're seeing is only the indices, right? Now if I zoom to, or I bring us right to the present, okay, and what's nice about this is actually, not, it doesn't change too much actually depending on what your periodicity is. Now if I look at, I'm just trying to get some perspective here. All right, so if I look at, let's say, from 1st of Jan 2009, that's where the left bar is, and let me see if I can zoom that. So I actually want to, okay, I'm just trying to get a fix. Yeah. So there is a bar, a vertical bar right on the left side. Okay, and let's say that's just, it is approximately at 1st of Jan 2009. Now from then till now, okay, from then till now, if let's say we say this is the bull market that has happened from 2009 crash, 2008 crash over 2009, the bull market started again, and you want to know which was the best or the worst, then this chart tells you immediately what happened. And if we come right to the present and come to the right extreme, the one doing the best is something at 635. Now if I go and match that here, then or not 635, sorry, yeah, okay, so yeah, 635 is the BSE auto. So the auto pack probably did the best, right, of the lot that we have from the reference date of 1st Jan 2009. Now if I zoom in, this could easily shift the priorities, but if I'm basically trying to figure out what it did in this time period, then auto did the best. And what did the worst at -40 is BSE reality. I mean, aren't we seeing those realty stocks actually lower than 2008 prices, but auto stocks are like way above. And the other sectors that did extremely well at 5x return, 4x, 4.6x return would be, where is that? Consumer durables, and we also have healthcare. So consumer durables, healthcare, auto, IT to some extent, and then FMCG and all are the ones that really performed. You can also see that as performance happened, whether it continued, whether it sort of stopped, it lagged. So you're getting also a picture of, performance was good, but after that some weakness crept in. Now if you just look at the topmost, which is easier because it's like just there in a in a world of its own, and that's the you know auto pack right here that we are talking about. Okay, you can see that actually for the last 2-3 quarters it's actually just went to a peak of 750 and then it's actually just stayed sideways. So you know that it's no longer performing. It was performing, it was a brilliant performance here from let's say mid 2013 or October 2013 to October 2014. It went up from in a level of 350 to 700, doubled. But if you look at, let's say, FMCG during the same period, really didn't do so well. This yellow line here did very well, and the yellow line refers to capital goods, right? So this was just as the previous election results came in, Modi got elected and all. So this was, everything went up. But here's the interesting thing: which went up the most? Which did not really go up so much. So even metals, sorry, the bottom one, the reality went up, but it was a bad performer for almost 2 years, and it still remains to be a bad performer, right? Doesn't mean that you should not be buying it, doesn't mean you should be shorting it, doesn't mean that it's going to do well, doesn't mean it's going to do badly. It just tells you what it has done. Now the whole point of relative performance is if you can do this in different time periods. So now I've gone back to daily, and I'm going to zoom in, and or rather zoom out. What is it going on? Okay, zoom in. Yeah, and let's say I want to look at only this year. Okay, then from 1st of, just trying to adjust, Jan 2015, then you can see that right at the bottom is a metal pack, right, and that's done minus 33%, and that's really bad. Having said that, please note that the metal pack is seems to have, in quotes, bottomed out, maybe a double bottom here of some sort in the metal pack, and it could be starting to maybe build a base. On the other hand, you can see on top something that has drastically fallen is the healthcare thing. It was doing okay, but please note the healthcare between August to October of 2015 really wasn't, getting better. It had sort of gone up, but not able to go up more. And then afterwards, the fall came, and it seems to be just, going sideways. Now, everything is also trending down, by the way. Everything seems to be having lower tops, lower bottoms, especially in this middle area, vast majority of the market. Okay, having said that, if you come back to the one which has been the best performing, plus 24 percent, then we are talking about which one is this? I still sorry. So this is consumer durables, right? And consumer durables, if you just look at the pattern itself, is showing relative strength compared to everything else, which is showing relative weakness. So, using these inputs to decide based on what you want to do, go long, go short, hold, buy, sell, liquidate partially, start accumulating, maybe distribute out, or whatever. This can give you a market-wide picture. Till now we never had a market-wide picture, right? So I hope you're getting the value here that is there. We used to compare individual charts, if you remember, and then we'd have to figure it out in our head, and we used to have this discussion of this might be better, that's probably better, and all of that. And I had to remember, you have to put in so much effort. Here you've got all of it in one screen, everything is there, and it's just very quick to identify, right? But just to be clear, you must not do this in just one periodicity. It's best to look at different periodicities, last 3 months, 6 months, 1 year, 5 years performance, whatever, and then get a sense of which sector is doing well, which is not. And if, like always, there'll be a whole bunch of sectors doing approximately the same thing, as you can see here right in the middle, right? Why does one want to be invested in that? You want to basically find strength, or you want to find weakness, or you might want to find something maybe like in this metal space, accumulation, maybe I'm just saying, right? So don't take my word for it right now. Okay, so this is what relative performance basically is, right? If there are any questions, do feel free to ask. Now, that is relative performance. Can we do this for any set of stocks, any combination? Yes, you can. AMI Broker gives you that complete flexibility to be able to do anything you want with just about any indicator. So I took that liberty, and here we have the auto index, and only auto index stock, only the stocks which are part of the BSE auto index. So what I did is, on top you have the price chart of the index. Actually, you can change this to any price, any stock that you want. It doesn't have to be this. It can be anything that you want. So I'm just going to put, let's say, Maruti here, and you'll get Maruti, and the bottom pane actually remains the same. Some color switches, line switch colors sometimes, but otherwise the bottom relative performance does not, right? And you can compare this with some other looking at this list, you can compare anything. You could compare something that's completely unrelated to this whole um, relative performance that you see here. And if I put, let's say, uh, I don't know, McDowell, right? So that's into alcohol. What does it do with anything to do with auto stocks? Absolutely nothing, probably, right? So you can do that. So uh, with this sort of a performance. Now let me just bring this back to with this sort of a chart. Let me just bring this back to BSE Auto here. Okay, so the idea here is, as you would have probably already noticed, that you've got Maruti, M&M, Tata Motors, Bajaj Auto, Hero Motor Corp, TVS Motors, Ashok Leyland, Eicher Motors, MRF, I hope you can see that, Apollo Tyre, Exide Industries, Amar Raja Batteries, then again, what is this? Bharat Forge, Bosch, and Motherson Sumi. And you can add, right? I have kept only the stocks which are in the index here. The other reason I've limited it to these stocks is because uh, most of us are probably interested in derivatives, and these are the ones which are also in the derivatives list. As you can see, a lot of auto ancillary stocks are not in this, but you could add them if you want, or you could create a separate chart which has only those stocks, or some other combination, whatever you like. So you can create one, perhaps, of not perhaps, you should create one of the portfolio you have, the stocks that you are already holding, to know which are doing well, which are doing badly, and help you to decide what you can get rid of, what you can hold on to, and what you perhaps should be accumulating. So Balki, Madhu, and everybody else who's going to be watching this, we've been, the thing about portfolio management, or knowing what to get, hold on to, what to buy. This is what this would help us with tremendously, right? Earlier, if you remember, again, we had to juggle in our mind with different stocks of each stock and trying to figure out which one did well, which one did, because they're all independent. Here we've got combined, and we know which is doing good or bad. So just to be clear, so from let's say 1st of November of last year, not even last year, sorry, 2014, or let me, we'll take it, say, January, 1st of Jan. All right. So on the most left extreme, you have essentially got 1st of Jan of 2015, and now we are 8th of Jan of 2016. In this 1 year, 1 month, what has done extremely well is this green one, of course, and that is Ashok Leland. Right? Now, of course, it's also that in the last, some September to now, so that's 1, 2, 4, 5 months, Ashok Leyland actually hasn't done better, right? It had a fantastic run June to August last year, but after that it's actually not done much. It's not actually getting better, but it is still showing tremendous strength, and that is exactly the purpose of this chart, right? So it is still showing tremendous strength. If this green line was still trending up, then that would be a very nice idea. Now let me put Ashok Leyland here. Okay, so we've got the Ashok Leland chart. I'm sure you noticed that this chart, this line here became blue. That's how AMI Broker works. It was a different color earlier. It was green, if you remember, but now it has blue. It's just that the blue has overlapped on the green. So that's because I put Ashok Leland in this pane here. So what you're seeing on top is the Ashok Leland stock price, and what you're seeing in the bottom pane is Ashok Leland vis-a-vis other stocks in this group. Okay, and this is what I was talking about. Here is where Ashok Leyland did very well, went from 65 to 95, but it has basically stayed flat for the last 5-6 months. Okay, and that's what this relative performance thing also shows. So now this could mean that Ashok Leyland's run is over, that it has no more steam left. Maybe it's going to top out, or it has topped out, and it might come down. On the other hand, if we get a rally, if the markets recover, there's a base that has formed, 7,600, the Nifty is holding, and China is not falling anymore, etc., etc., then the stock to invest in would be Ashok Leland according to this analysis, right? In the last 1 year, that's the one which has done the best, and that's the one you should be holding, right? Having said that, let's look at the one right at the bottom here, or let's look at the middle one. Okay, there's this bright green neon line, and that is Bajaj Auto, right? That is Bajaj Auto right in the middle there, right? This green line here, thin line, that's Bajaj Auto. And Bajaj Auto is basically, it has gone down by about 10-15% in March, April, May last year, 2015, but it recovered. But essentially, over the last 1 year, Bajaj Auto has made no money for you, okay? Or having our investments in Bajaj Auto over a 1 year period would not have really helped. Now, if I come right to the bottom, you can see, and this is something to point out here. At this point where you can see the red dot, there's a, well, for the lack of a better word and not to be confused with any other context, a crossover here, wherein the yellow, this yellow line here, and what is that yellow line for? That is for Tata Motors. Okay, Tata Motors had really done very badly, okay, at down 44-45% in about 8-9 months after 1st Jan 2015. But after that, Tata Motors underperformance, stopped, and it started to do better. And what is the worst now is not Tata Motors, but this other one, which is Apollo Tire, right? And Apollo Tire has actually come down quite a lot. Okay, now that is definitely uh, well, if you're sticking with the idea of relative performance, then that's fine, which means to say that Apollo Tire is actually now performing worse than Tata Motors was, and Tata Motors actually seems to have recovered, which, as we all know, the stock has recovered in the last 3-4 months. But again, now in the last week or last 3-4 days, we've had this bear run. So just to be clear about the context, so if you wanted to look for some weakness, then most probably then what you should be looking at is Apollo Tires and not Tata Motors anymore, because that's the one which is doing quite badly. But of course, in the last 1 week, that outperformance has or underperformance has caught up, and both are equally bad. But having said that, the Apollo Tire is actually gone lower, 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 in a sense. Think of lower lows, and that shows a sign of weakness. But Tata Motors has gone up, and it is still, for all practical purposes, at a higher bottom, at a higher level, which is a sign of strength. Okay, and why would you want to stick your money into any of these middle ones? Really makes no sense. So this is just the explanation on BSE auto stocks, and I did that with all the other important sectors. So this is with Bank Nifty. You can see the one which you should definitely not be having is what is minus 61 is Bank of India. Okay, Bank of India is like really, really pathetic, and it's just going down and down and worse and worse and worse and worse. If anything, that's the stock to possibly short. This yellow one here, which is let's see, minus 45, that's Canara Bank. That's the other one to short, minus 43 PNB. So basically the public sector bank ones are really to be shorted. Now let's look at this green one right in the middle, in the middle of the screen here, and that one is for State Bank of India. So please note that for a good part of 2015, State Bank of India was actually a good performer. But after July, July, August of 2015, State Bank's performance actually came down. And you can see that it actually fell a lot, okay, did recover, and it is falling again. So this performance relatively, I mean, you obviously you could have seen this on the individual chart also, but it gives you a sense of how this versus the rest. Now at this point, State Bank of India being the big daddy, especially of PSU stocks, you could have said all the PSU stocks are probably in trouble. Of course, you didn't need State Bank to tell you that. Well into 2015, in the first few months, you saw this whole set of stocks right here, which is again Bank of India, your Punjab National Bank, and your Bank of Baroda, all doing very, very badly. Now, consider this, State Bank of India was not, but almost all the other public sector banks were. And guess what? It's just a matter of time that either all those other public sector banks would try and make a rally, which by the way, they tried here, if you notice, okay, or State Bank of India was going to just pull itself down and with the rest of its, brethren. And that's what happened. You had a rally, but State Bank of India actually didn't rally. So if you're with this line here, please note that here, if you look at the bottom three lines, they all went up, but SBI did not go up. That's the bright green neon line here. Okay, so this is what relative performance can do. Now, just to finish the story, right at the top, you've got this one which is right healthy at plus 31, and what is that? That is IndusInd Bank, right? You've got IndusInd Bank doing exceptionally well in a pretty weak market. You've got the other one which is Kotak Bank, which is doing very well, and at 16 this is HDFC Bank. So if you had to put money long, these are the ones that you would want to put your money into. Now, given its banks and there's so much follow up reading and all, probably big deal. What's the intuitive, how do I, why bother, right, with this much? But let me look at something that I don't always see a lot or compare a lot of, and that would be perhaps consumer durables, right? Now in consumer durables, what should I be looking at, and where is my money best invested, basically, right? And if you look at consumer durables, there's one thing which is just bloody hell doing exceptionally well, and that is Rajesh Exports, right? That one has done extremely well. So if I'm going to just put this here, right, you can see first of all that yellow became blue because that's the active stock now, and in the last about 7-8 months it's gone from 200 to 700 rupees. I mean, and if we had been looking at this, let's say July of last year or June of last year, you'd have seen that it is doing really, really well. And that performance went from 40 to 240, that is from here to here, basically, right? So this is the period we're talking about. Okay, but after that you had an underperformance, which even after that it was doing well compared to everything else, and then again this thing took off from about 400 levels and it's right now at 700 level. That's where we are right now. So this was the story. Now will this underperform, oh sorry, great exceptional outperformance continue? Maybe, may not be. Why am I saying may not? Because as you can see just on the let me just take out that color because it's that blue is really bad. I'm just going to put NSE 50, right? So coming back to the yellow, okay, you can see the change in color. You can see that that has basically what do you say, bottomed out, right? It's really not, the yellow line is not growing anymore. It has gone sideways. Is this a sign of topping out? Possible. Or if the market recovers, then this could also do well. So don't just blindly get out, but use this as a good, very efficient, very fast filtering visual guide to which one is doing well and which is not doing well and which is what doing average, right? So this is what the whole relative performance charts are about. Please feel free to any questions, open to that. And the idea here is if we have all of it and do this step by step in a calculated fashion. So the first step would be to look at, let me see if I can find it. Where did it go? Yeah, so as I was saying, so the first step would be to look at the overall sectors and then look at which sectors are doing well and which sectors are not doing well, which are the ones to buy into, accumulate, hold, which one should we be selling or even shorting, etc., sector wise. And then once you've identified that, then you look at each and every sector individually and the stocks within that sector. Okay, so we are doing a top-down approach, essentially looking for the strongest, the strong. Okay, strong sectoral index, and in that sectoral index, which is the strong stock, or the weak sectoral index, in that weak sectoral index, which is the weakest stock, right? Or which is basing out, or the other way, however way you want to use it, but be clear. Okay, so the approach would be to look at, so one level higher, which I don't have the data on this, that's why I'm not covering this here, would be to have the, international indices, the global indices, and look at how Nifty is compared to, let's say, Nikkei, the Dow Jones, the FTSE, the DAX, the CAC, the usual, you know, uh, set, and quickly find out which ones are performing vis-a-vis each other. So any of us looking at, say global investing or ETF investing through the US route especially, and where it's so easy to do that, then if you want to look at macro stuff, then that sort of a relative performance of which one and which one not, right, would give you a very quick answer. That would, this sort of an approach would give you a very quick answer. So like I was saying, one level higher, but not doing it because we don't have the data. We'll get that in some time. Then you look at the sector ones, and for that we've got this chart. You just look at all the sector indices, and bingo, you decide which sectors are doing well. Now, just to again, make the point here. So at this point, the sector that is doing well is consumer durables. So then you just go to consumer durables. Where is that? Okay. I had it. Yeah, no. So as I was saying, we found consumer durables as the best sector. Then we just switch over to consumer durables and all the stocks in that, and then you find what is good. So a quick, nice, easy way of doing this. So this is still work in progress. I propose to add some more things. So and you're probably, most of you seeing this for the first time. Okay. Right, so these are the 12 sectors for which I have built this. You can of course create any combination of stocks, securities, bonds, equities, commodities, anything that you want, as long as it's there in your database. So what I want to do going forward in the IMRs regularly is sort of start with this. Hopefully you'll have some global data, also start with that, do a top down, quickly find the sector, then drill down and quickly find the stocks. And then once you have quickly found the stock, then whichever stock that you want to basically look at, you've got this template that we will use to look at what we should or what we should not be into. So Rajesh Expo, right? So there is Rajesh Exports, and we then decide what do we want to do with this. And at this point, this is looking, like the top is a little tired. You can clearly see that volume has come down considerably. 700 is probably where the stock's resistance level is right now. Okay, and we'll just have to wait and see how it behaves around 700. I don't think the indicators are going to help us really, so I'm not going to do that at this point. I just wanted to focus on the format, right? So like I was saying, you do the top down relative performance of, say, global indices, then sectors, then win the sector. And for those of us who have really nice screen or a large screen, or you have or a multi-screen setup, then just having all of this in one screen, right, to see it really clearly, because here it's looking really cluttered. You've got all the 12 sectors with all the stocks of those 12 sectors at one shot on the screen. In case you want to go down that road to do some quick analysis, you could do that also, right? So that's basically what there is. Any questions, any comments on how you think this could be versus how we have been in the past. Just feel free to jump in. Right, so that's it for this session. So on the regular IMRs, since we already have our watch lists ready now, especially the FNO ones, we can create more sectors. We've got our indices in place and all. I'm looking forward to this being faster, cleaner, more efficient, easier to understand, and more result oriented. That's basically what I'm hoping for, and just more fun and more efficient than what we've been doing in the past, right? So we'll have the first full session on at least the Nifty stocks either tomorrow or day after, and then we'll build up from that, right? So that's it for this session to explain the uh, the format, etc., the layout. So like I said, play around with the layouts that you already have, and maybe if you have a list ready, then we can study those closely. Yep. And on that note, just in case, so just looking at the Nifty, just to be sure. So very clearly 7,600 is a very, very important level now. That's what we want to be very, very clear about. I'm sure all of us know that. And if anything, this is the downtrend line. We have a triple bottom at the 7,600 level. Today was, well, a spinning top, sort of a doji. But if you look at the volumes picture, etc., so if you look at, say, here, you can see that, definitely the volumes were higher than when it went up earlier. And then again, when it went up here, the volumes are low. And again, when it went down here, the volumes have indeed caught up. So what will really be interesting to see next week is the 7,600 level, a triple bottom uh, at the very least. And triple bottoms tend to be pretty good in terms of though theory says they're quite reliable. But if this triple bottom breaks, and just going to weekly, and let me zoom in, you can see that the weekly candle is, well, not a good one, a very big Marubozu type red, plus very large volumes, and the story on that is definitely not good. If you look at indicators, weekly, this one, yeah, some folks could say that we have a potential divergence here, bullish divergence, but you could get one more move down before we may bounce back, up. And if I look at MACD, well, really, I wouldn't say it has bottomed out at all. It is actually quite weak, though there is this histogram which is showing less weakness right now. But remember, this is a lagging indicator, so takes time. Um, so there is little hope, some hope that 7,600 will hold, but at this point, definitely looking tough. This is, by the way, a weekly chart, right? If I go to daily chart, some strength is showing up on the MACD. It is also showing up perhaps on the not real. Actually, so here's what's interesting. If we look at this, we potentially have a divergence on RSI. Let me put the same line there. It would be this line. Okay, then that red candle is the reference candle. Maybe this one. Yeah. Okay. So this vertical line that I've put here, we definitely have a divergence, a slight divergence, but I wouldn't read a bullish divergence, but I wouldn't read too much into that at this point, only because the volumes are pretty high this side, and that Marubozu type red on the weekly is a little ominous. So we could still see a move down. Now, if the market does go down and we have a triple bottom there, then if you just look at the price only, then you're looking at really not much support till, I would say, at least 7,200 here, right? And quite possibly till even 6,800 at the lower level. So that's where I would say really good support is at this point. So if it breaks, I think shorting till 7.2 is quite a profitable idea. And if that breaks, then I really doubt 7 is going to hold. 6.8 is what it looks like at this point. Very early days to accumulate, I would say. Maybe individual stocks are showing strength, absolutely no doubts about that, but the market is definitely looking weak. When we do the full IMR tomorrow, day after, look at all the sectors, etc., and then take this to a deeper level, right? So that's the view, quite bearish, I must say, on the overall market. Right. Done. So that's it for today's session. This is what it was about. Do write in any feedback, any inputs are most welcome and solicited. Right. Thank you. Good night, good morning, good afternoon. Have a great weekend, and we'll catch you in a few hours.